Hello guys, and welcome back to another video at the Capital Trading Group. In this video is about how to trade on the lower time frames, and mainly on the 1 minute. This is something I see a lot of people try to emulate but fail, especially because they are conditioned to try and catch these 1 to 30s, 1 to 50s, and even higher setups, mainly due to social media. So what I will do is I'll demonstrate the right way to trade on these time frames in particular. So the first thing you need to understand is the lower time frame characteristics. Okay, it's very fast paced. Okay, because you're scoped down on a lower time frame, you're going to see big candle, big volume movements. Okay, so when you're taking positions, you will either win or lose very quickly. Okay, this is something you need to understand and condition your mind, okay, to adapt to. Okay, secondly, there will be a large amount of manipulation that takes place on the lower time frames in particular, mainly the 5 minute, 3 minute, 1 minute. Okay, this is mainly because it's easier for manipulation to take place, as it requires less capital from market makers. This is something I'm going to cover shortly. And thirdly, lower time frame can very likely be confusing, and this is mainly in particular when you don't pay attention to higher time frame narratives. Okay, so if you don't look on the high time frame, the daily, the 4 hour, the 1 hour, etc., you can very much get lost on the lower time frame. This is something I see a lot of new traders in particular get confused about. They focus on the lower time frames instead of the higher time frames, and they get lost and they take a lot of trades. Okay, so what I'm going to demonstrate now is some tips that you can use and implement when you're trading on these time frames to help you master and execute on these on the 1 minute and the 5 minute, etc. Okay, so let's go ahead and get straight into it. Now, if I go on the 12-minute time frame, what you need to do is the first thing is you need to pay attention to the higher time frame structure. Why? Because it's something I mentioned before, there's less manipulation that takes place on the higher time frame. Now, this is the daily and 12-hour structure on AUD USD. So what are we seeing? We saw this high taken out, and then we saw a structure, a new low being made. So we understand that price is now ready to make a new lower low, and that's exactly what price does. It comes to retraces back to a premium zone, a premium selling zone, right? Makes a high and then makes a new low. Okay, and then what does price do? It pushes down even lower to make an even another low. Then we see price making a corrective structure, come back up to retrace to a prominent selling zone, or referred to as a premium selling zone. And what you see, well, I'm going to dive on the lower time frame now, is if I go on the 4 minute in particular, right? Because we've paid attention to the high time frame narrative, now we understand that price is likely going to offer us a bearish reaction from this zone. And if you watch my previous video, you'll understand what this is already. This is what I refer to the 3 drive pattern. Okay, and it's usually a display of distribution taking place, and this is on the 4-hour time frame, so it's on the higher time frame. Okay, 1, 2, 3. So now we've seen the third drive. We're likely going to see a push down in price. So what I would do, I'd scope down on the 15-minute. Now I understand that this is a prominent zone where price is going to likely push up from. Why? We have a lot of imbalance, right? After the third drive, we have price that needs to fill in a lot of all these wicks, okay? So price is likely going to come down. So that's why this is a prominent supply zone. It's a third drive, so hence why I've marked it out. So let's pay attention to price. What do we see? Right, paying attention to the structure. Okay, what are we seeing on price? We're seeing price push down from this zone and make a new low. Comes up, liquefies that low, so takes out that liquidity from the high, right? And then comes down on gives us some sort of bearish reaction. So now what you need to do is pay attention to liquidity. Now the liquidity here is these arrows that I've marked out. Okay, so if I now go on the 1 minute time frame, I marked out 2 zones, the extreme and the decisional. Now in this scenario, there's a reason why I've marked out this scenario in particular, because we have liquidity here that has not been taken out yet. It's coming to the liquidity now, and this is the exact zone where I'd look for price to take out this to give us some sort of pattern on the 1 minute to come down and target at least this liquidity here. Okay, this will be our first target because price pushed up, hunted this liquidity first, and now it's going to come down, likely come down lower to take out this liquidity, right? Equal lows, equal highs. So what I would do, depending on how you trade, I would like to likely leave a limit order here to take it to this high, because I understand that because there's liquidity placed just above this zone, this order block, it's likely going to give a nice reaction from the zone. So what I would do is I'd target below this liquidity here, or once it comes out, takes this liquidity, I would move stops to break even, But if I'm paying attention to the higher time frame narrative, I know that price is likely going to come down and take out this structure point, because it already broke structure from the left, right? Okay, so I understand that price is likely going to come down to this zone. So if I push up on the 5 minute time frame, let's see what price does. Remember, price is coming into taking that liquidity, and then we see a bearish reaction, and then price pushes down to then target this liquidity zone here, this structure point, and then it pushes down lower. Again, this is on the 1 minute and the 5 minute. Now, if I'm paying attention to higher time frame narrative, I understand that the next prominent zone is this zone, which I marked out with the gray zone, and this zone structure point here. Now, as I mentioned, if I go on the 5 minute, there is prominent a wick that needs to be filled here. So this is another zone I know that price is going to likely come down lower. So paying attention to the higher time frame, if I go on the 1 minute, I would target at least price to come out and take I'd target for price to at least come down and take out this wick. That would be where I take partials, and my second region would be come back to this prominent zone. Why this zone in particular? Because this is the zone that broke this structure. It's the last it's the last price point before price pushed up and take structure here. So I understand there is intent behind this structure, this zone here. So this is where I would likely move place my higher time frame or my swing TP. And as you can see, price pushed down and offered a nice 1 to 30 just by paying attention to the higher time frame structure and pushing it down all the way to the lower time frame, to the 5 minute and the 1 minute for execution. Okay, so that is just a quick example of how you can use and pay attention to the higher time frame structure and use lower time frame structure to execute. Okay. Now, the second tip, which I've gone through here, is approach the lower time frame the same as you would the higher time frame, right? As I've approached the lower time frame in AUD USD, when I was going through this example, what was I using? I was using structure. Price took out the low, right? And then I was using, if I go on the 3 minute, I was using liquidity in particular. Okay, so you need to pay attention to structure and liquidity. The reason why I entered at this one, because I saw equal highs that got taken out, and then I saw a nice reaction, okay, to enter to come target this liquidity low at the bottom. So even if I entered here and price took out this low, the safest thing I would do is I'd move my stops to break even, because I understood that if price reacted from this zone, something like this, and price pushed up, then at least I'd be taken at break even before price would either come back from this zone and then give us a reaction where I could look for another re-entry in price. Okay, so paying attention to structure and liquidity is very helpful on the lower time frames. Okay, so that's why you should approach it the same way as you would on the higher time frames, but always pay attention to the higher time frames first, as it will help you understand the intent and where price will likely give you a nice reaction from, so you can execute from. Okay, that's tip number 2. Tip number 3 is if I 1 second. Tip number 3 is avoid taking too many trades. Now, the reason why I say this is because it comes back to the characteristics I mentioned in the beginning. On the lower time frame, you see a lot of manipulation taking place. So if you're going to execute on the lower time frames, execute based off your higher time frame narrative. Execute when you see price come to a daily or 4 hour or even a 1 hour important important POI. Okay, so that will limit your trades, and it will allow you to push down on the lower time frames to execute to catch those bigger RR positions. So this is one thing I definitely recommend. Don't just try to scoop down the 1 minute time frame and try just to trade off based off wick fills, imbalances, and liquidities. Always trade based off high time frames. That will avoid you taking too many trades. Okay, because you're gonna get stopped out a lot if you take too many trades just based off the 1 minute or the 5 minute. Okay. Now, the final tip, which is very important, is to use volume and timing. Again, this will limit the amount of losses you take. Now, what I mean by this is there are 3 sessions in particular in the FX market. There's Asia session, right? And there's London session and New York session. Now, this will help. You will have to check based on where you're located in the world. But I'd recommend trading London and New York, okay, because this is where you see the most volume take place, even in this example. So if I scope down on the 3 minute, right, where do you see volume enter into the market? Now this green, the blue zone is Asia, where you mostly range, right? London offers a nice push, and then New York is where you see a reversal from London, and you see a lot of volume enter into the market. In particular, what you call the switchover is basically is in between London and New York sessions, and this is where you see the most volume in the market as a whole. So if I scope down on the even the 1 minute, right, you can see there's a nice entry model here where you see price sweep the low and then it sweeps the high, okay. And in this scenario, what I would do is I'd wait for price to come into the 1 o'clock time before looking to enter, mainly because that is when New York session starts here in London. So 1 minute, I'd wait for structure point here. So we've come into New York session, price is broken structure. Now depending on how you trade, you either enter at the breakout of the structure zone, right, placing your stops below, or at the previous low, or you wait for a retracement of that zone, okay. Right, now we've seen price come up. If you're a breakout trader, you'd place your stops, you'd place your entry at the high, right, because price is broken out and giving you entry, and then you'd place your stops below the previous low, and then you scope on the higher time frame to target your zone, which would be this liquidity point. Again, paying attention to liquidity and structure on the 6-hour time frame, that is where there's clear higher on the high time frame, there's liquidity based on the 6-hour and the daily, where you have equal highs. So that would be basically where I would look to target. And as you can see, it offers a nice 1 to 9.5 R. Even if you placed it on the previous low, it's still 1 to 6, okay. But because you've scoped down on the low time frame, you found your entry model, and you've waited for volume and timing to enter in the market before even looking to execute your position on the 1 minute time frame or the 5 minute time frame, and this alone has increased your probability of catching the right move, especially on the lower time frame, because of the high amount of manipulation that takes place, okay. So let's just quickly recap, okay. Pay attention to the higher time frame narrative, focus on structure and liquidity, okay, because it's very important, especially on the lower time frame, so you don't get confused. And lower time frame is where most manipulation takes place, so you need to avoid taking too many trades, and you can use some of the tips I've mentioned into to limit down the amount of trades you're actually looking for, or the amount of zones you're actually looking to execute from. And fourthly and finally, only trade these these time frames during high volume sessions, okay. Again, it will limit your losses and allow you to catch those large volume movements, because if you're trying to trade in a low volume environment, you're going to get stopped out a lot, because price doesn't have the volume needed to make those bigger movements. So there's no point trading during those hours. You're only going to get stopped out and manipulated out the market. Your stops are going to be hunted recklessly, okay. So I hope you guys enjoyed this video. Please leave a like and subscribe. You can check out the links below for our services. We have a premium analysis service, and I'll be launching mentorship just before Christmas, so I'll make an announcement on that soon. But if you enjoyed this video, please let me know in the comments what you'd like to see next, and with all that said and done, I'll see you guys shortly. Bye bye.